You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time once again for the option block. Everyone's favorite. Hopefully it's your favorite. It certainly is my favorite bi-weekly source for all things options related. A little bit of wit, a little bit of wisdom, a little bit of analysis, a little bit of education, some strategy, a lot of unusual activity, your questions, and a peer into the future. We mix it all together and we get the tasty cocktail that is the option block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-expanding Options Insider Radio Network. If I sound a little bit different this week, it's because I'm coming to you from Chicago, but not from the scenic, a little bit less sunny Options Insider studios today. No, I'm actually coming to you live from the Futures Industry Association Expo here in Chicago, where the entire derivatives world pretty much descends on Chicago for a few days here, and I'm coming to you from the belly of that beast. So if I sound a little bit different, that is why. We'll be back in the studio later this week, actually next week, I should say. So don't worry about that. And of course, however you listen to us, not streaming live today, unfortunately, we just couldn't make it happen in time. But you can listen to us after the fact, all of your favorite outlets, including the website, iTunes, TuneIn, Stitcher, so on and so forth. Also via our mobile app available for iOS, Android, and the beloved Fire OS. Actually, I have a few people here listening live here as we're doing the show, so they're getting a very one-sided view of the program, so it'll be interesting to see what they think after the show is complete. And also joining me on the old program today, my usual cast of characters. Starting off, let's go in order of proximity. Let's go to that sleepy hamlet known as St. Charles, Illinois, where we are joined by Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program. How come you're not down here at FIA? I know I've seen you down here in the past.
Well, why would I ever want to leave St. Charles? That's the question.
That's true. That's true. You do live in paradise on earth. Why would you ever leave?
No, it's good. It's one I wish, in hindsight, I wish I would have made the time to do it. But FIA is a great show. And if you ever get a chance to go to that, listeners, I'd highly recommend it. There's a lot of good stuff there.
Yeah, they make it even accessible for the retail. I mean, it's one of the bigger vendor shows in the country that we go to. So if you want to just come check out Expo Hall passes, they're usually available pretty much for free. You can go kind of get the lay of the land in terms of new technology and new things that are going on in the world of options. So if you're in the Chicago area and you got a few minutes, you want to load yourself up on some tchotchkes in an Expo Hall, this is definitely the show to do it. And also joining us from a little bit farther afield to the land known as Maine, we are joined by the Rock Lobster himself, Mr. Andrew Giovinazzi. Andrew, welcome back to the Option Block program, sir.
It's a pleasure. It always is a pleasure. And I hear you got a live audience there. And I
yes,
just
a live audience.
They're totally getting hosed. They're not. I've got umbrage. They're not even getting the best looking of all of the hosts. That's all I'm saying.
They'll have to make do with looking at me for the next hour or so. I can't beam them in via your speaker, so they can't even hear your mellifluous tones, sir. So they'll have to just make do with me for the entirety of the. I warned them ahead of time. They still wanted to sit here. I don't think they're masochists. Either way, we got the team assembled. So let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. We got some nonsense going on in our chat here already. I'm just going to look past that because it's completely distracting me. Welcome to the Trading Block. This is indeed the portion of the program where we break down what was moving, what was shaking in today's activity. Like I said, I was kind of locked in a lot of sessions and panels and touring the expo hall floor today. I didn't have a chance to watch the too much of the moving and shaking that was going on today. Net, we ended up slightly down on the day. SPX off about 3 handles to about 21.41. The VIX cash ticking down a little over half a handle to 13.78. Back in that 13 territory. My prediction for volatility view is looking a little bit better than it was earlier this week. I should say a lot better, actually, because I was fading us quite a bit. We'll see. We have a day to go before my prediction comes home to roost. So we'll see if we can make it another handle or so to the downside, and I'd be looking pretty nice. So we'll see how that fits. Meanwhile, though, interesting day. I don't know, Mike and Andrew. I know, Mike, you've been here before. Andrew, I'm not sure if you have. This is an interesting kind of show. Much more, like I said, I mentioned the expo hall. Retail can come in there, but the sessions and panels are much more, as the name implies, industry oriented. And there's been a lot of interesting stuff going on. A lot of debate over here. The hot debate from an options perspective is still regards to not penny auctions, I should say, but just price improvement auctions. Whether they are, some people see them as the cure for all ills in the options market. Other people see them as the literal death of the options market. I'm sure there's a lot of middle ground to be had in between there, but a lot of contentious debate around that. Also, our friends over there at Box finally announcing where the hell they're going to actually build their trading floor that they announced back at OIC. They are actually adding a physical trading floor, and surprise, surprise, it's going to be in the Board of Trade. So Boston Options Exchange launching a physical options trading floor in the Board of Trade. So a lot.
Now that's big news.
That is
floor?
Crazy, actually. A physical floor, yes.
Stupidest thing I've ever heard.
How did I know you were going to react that way? I heard someone joking to me.
Gosh.
I mean, are you serious, or is this just like an Onion type of thing?
I am complete. This is not the Onion. This is completely serious. They announced it back at OIC, but they didn't give an actual location for where it was going to be. And I've heard a lot of jokes since then. It's going to be in the Starbucks across from the SIBO and things like that. But actually, it's going to be in the Board of Trade. So yeah, everything old is new again. And I was talking to the Nasdaq folks today. They actually came through the studio. That'll be on the network next week, I believe. And they were talking about doubling down on floors as well. They've expanded the Philly floor. They said they've added walk-in brokers. They have more pits. They have more locals. So floors are back, which is funny. If you talk to CME, they can't get rid of their floors fast enough. If you talk to the options guys, they're bringing more floors. There's going to be more floors this time next year than there are now, which is kind of mind-boggling. I don't know, Mr. Rock Lobster, you're an old floor guy like myself. What? Obviously, from your initial comments, I'm assuming you're not hugely in favor of that move.
Well, I think one thing is there's still a lot of size trades, complex orders that trade on the floor. Nobody wants to put a 3,000 lot through the system and let everybody lean on it. So there's still a place for that for options, just because the nature is options are still finding liquidity. It's not like futures where it's 2 ticks wide, 5,000 contracts up or something. So options are still how you have to provide liquidity. That's a function that the market makers do that everybody kind of conveniently forgets that. They just think, the exchange puts those quotes up. No, the exchange doesn't. The exchange provides the infrastructure for the quoting, and then they pound on all the liquidity providers to make really liquid markets. So as far as, there's so many extra trading floors around in Chicago. I guess they probably got one for cheap. The SIBO has that whole second floor right above the current floor. Or heck, the box could just go on the SIBO floor and just take half the floor that they shut down. So, but I do have friends that are still trading on the floor, and they're doing well. They're doing fine. Even in San Francisco, it's the floor's small. There's not a lot of liquid market makers there, but they still for the amount. You think of it this way. There's 25 market makers down there, something like that, but they're still doing a lot of volume, and there used to be 500 market makers. So all that paper that hits the floor is only 25 or 30 guys or something like that are looking at it. So as far as floor trading goes, it is not the same, but it still can happen. I would just say, the box should just be folded. I don't know who they should need to be folded into, but at the time, I think they, when they first started 10 years ago, and there was nice people there, but I don't know if it's worth the cost to start a floor, but Chicago's a place. There's a lot of order book officials around and a lot of quote operators and whatever else you need to start one.
A lot of walk-in brokers hanging out at Ceres waiting for their day to come again. And so, all the quote reporters are all just hanging out for the last decade, waiting for their time in the sun yet again. Maybe it has come. They made an interesting point in one of the sessions today. Actually, Ed Boyle, who runs Box, was saying that the volume percentage of the business that's going up on the open outcry has actually grown over the past year, whereas the retail percentage has actually slipped. So if you want to get in the growth area of options, apparently complex orders on a trading floor is where the action is.
Who knew? Maybe that's it. Did you ever see that movie Coming to America, where the Duke brothers are the bums, and Eddie Murphy throws that big stash of money at him, and he looks at one, looks at the other, and says, "Mortimer, we're back."
Yeah, we're back in business. Yes,
real life version.
That's exactly what it is. The walk-in brokers are back, and everything is right with the world. Well, aside from the madness of the industry these days, what's Uncle Mike? What's been catching your eye in today's market, sir?
Well, I mean, today I'm surprised we didn't have more movement after the explosive debates last night, to tell you the truth. It wasn't anything too unexpected, but I would have figured we would have had a little bit more movement one way or another. I mean, come on, market 3 points. Is that all you got? Jeez Louise. Not a lot lighting up the tape today. I mean, we had... I'm just going down everything with which I'm looking at. We have very minimal movement in gold, very minimal movement in stocks, very minimal movement in a lot of the underlyings with which I watch. And not a lot happened today, quite honestly. I mean, we had a little bit of a sell-off earlier in the day, but we recovered from that, and it was an exciting road to nowhere today, I guess.
A road to nowhere. I like that. What I'm looking at is, I thought today was the day where the market decided that, Hillary is going to win, because I thought there's no way they're going to take the vol down below 14 prior to, even though, realized vol is 8 or something like that. I just no way it's going to get that cheap. No way. Although I gave up trading the vol products today, actually, because I've been wrong. And it's traded into the 13 handle. So I see that as the market is starting to it does what it does. The market discounts the future. So the future right now, I'm not being political. It's just, if the vol was 22, I think maybe they think Donald was going to win. But with the vol 1384, it looks like status quo, and whatever that is, and status quo is probably Hillary, and that's what you got. So. That was a surprising number as they start taking the vol down. Now we'll probably get another bounce, because who knows what could happen. You can't say it's all over, but as far as vol goes, if this is starting to play out like it is, we could see, I don't know, I think we might see a low vol touch for the year after the election coming into Thanksgiving. I mean, we could have the lowest settle for the VIX in the November cycle, which I think is, given the year we had, the fact that we traded 1820 or something like that, 1830 at some point, and we're going to end up touching. We could have a 12 handle close in November. So I just was surprised. That's all I'll say. I'm surprised, but again, the market can be pretty efficient at discounting once all the players see what's going on. And the VIX in general, since it's all the S&P 500 vol, it's the sum total of everybody, a huge amount of players, right? All the global players, what they think. So if they're selling the crap out of the vol and the SPX, they're starting to see the writing on the walls. And I don't know what InBet put Hillary at lately. I know it was very high last week, but I'm sure it's only higher now. So that's what the VIX is telling you. So just get out of the way.
I think you're missing the clear, obvious driver for the VIX, Mr. Rocklobster, which is that they need to bring it in line with my projection from last week. So that's why they're acting speedily to make my prediction come to pass. So I appreciate them and the market obliging me in that sense. Speaking of the market, there actually are some things popping off here after the bell. It's not all Hillary and price improvement auctions and trading floors. We actually have a few names out here. E-Trade coming off after the bell, as well as good old Softy and a few others. Looks like Softy looking pretty good in the after hours, up about 3 handles or so, 280 or so, nearly 5%. E-Trade, our old friends E-Trade there, interesting to see how they're reacting because, of course, they have the big deal. They just announced acquiring Options House, so we'll see how that unfolds. All right, now up. Looks like about 1% in the after hours right now. I don't have their straddles in front of me, Mr. Rock Lobster, so maybe you've had a chance. Particularly, I know Softy is right up your alley. So any of those catching your eye, any of those lighting up your pit chat today, and how are they looking relative to their vol and their straddles coming into earnings?
The Softy, once again, I think this is the 12th or 13th cycle in the row. If you bought the Microsoft straddle 3 weeks before, if you bought the 1 week after expiration, so the Oct 28 would be this one. If you bought that straddle and you scalped the gamma, we're going to get letters about that, but if you traded the gamma, just kind of unwound it as it traded lower, traded higher, it would have paid handsomely again. So past performances, and I forgot, we looked at it a couple weeks ago, and I'm like, okay, and then I didn't, and then it went by, and then the market fell apart. I'm like kicking myself in the head. But there you have it. It closed around the 57 straddle closed 275, and it looks like that's about, so it'll pay. I mean, I think this will probably pay about 50 cents a straddle, it looks like, on a 275 straddle, so that's not too bad. And they like it. I like Microsoft. I own it. And hopefully I never have to sell it. So it's better. Camp. It's better than a CD right now.
Yeah, Microsoft no longer the resounding meh of the earnings cycle. You know, they were. How many times have we said that? They were the most reliable premium right in the business for the better part of a decade. Yeah, and now, that was just lost money for a decade. And now, well, at least not so bad if you rope some premium on. But other than that, yeah, now the last year or so, last 6 to 8 quarters, they've certainly been lighten it up a little bit more, which from an options perspective, we appreciate. So hats off to Microsoft getting back into the conversation. Any other earnings there catching your eyes, Uncle Mike or Mr. Rock Lobster, before we roll on into ye old odd block?
Let's roll.
I think we roll.
Right.
I haven't seen anything yet today.
All right. And then with that, then we'll keep on rolling into the darker and more dubious side of the business. It's time for the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, that funky tune means it's time once again for the Odd Block, the portion of the show where Andrew and I, and anyone else who is willing and indeed able and fearless and perhaps foolish enough to do so, don our trench coats and our top hats, indeed our fedoras. Fedora a little bit better than a top hat. Let's go fedora. And proceed to head down the dark alleys of the options market. Going to kick things off actually in my old stomping grounds. I never made markets in this, but I traded it fairly active for a long time upstairs. This is Activision Blizzard, ticker symbol ATVI, trading today right around a little bit north of the 44 handle, 44 and a quarter or so to be precise. This is the name that averages about 18,000 contracts a day, so fairly decent paper, all things considered. Certainly for an odd block candidate. I mean, we talk about names here, 200-300 contracts a day, so Mr. Rock Lobster. So 18,000 is certainly lighting it up. Today, doing a fair clip as well, including over 10,000 in one fell swoop here, and coming in the Nove 45 calls. By the way, you hear some background noise here, listeners. We are in the middle of this conference. I think some people are shutting down, so that's what you're hearing over there in the background. It's not the walls caving in on me, but indeed we saw the Nove 45 calls lighting it up today to the tune of 10,000, trading for $1.01. Let me just switch it around here a little bit to make it a little bit easier. There you go. That should be a little better. Should keep some of that background noise out. And Nove 45 going up for $1.01. Looks like paper buying, which is interesting. Again, going up in one block over there on the SIBO. Marked the spread, but we didn't see anything else going up with it, any other legs or perhaps any other stock legs, which usually be marked something else like a price variation, something like that. But we didn't see anything else coming off there. So it appears to be as it is on the surface, which is that someone's got some love, got some upside love. There is only about 3,400 contracts open on this strike, so clearly opening paper here. This has been an interesting one to watch. I know you used to watch this one, Mr. Rocklopsy, because you like the gaming sector as well. And this one, particularly when it was back, I don't know, about a year and a half ago, when it was back in like the sub 20 range, was kind of like a Microsoft in the sense that it was very reliable. Every quarter upon quarter, you could write premium this all day long. You got fairly decent levels for it, given the fact that it didn't move a heck of a lot, and then it would resounding meh every time, and it was a reliable thing. It was also a decent setup sometimes with the way depending on how they play it up for nice bullish risk reversals out there. And now, of course, up in the 44 range, it is a different beast entirely. So that said, what's your take here on our friend? You think he's just loading up here, not really swinging for the fences? He's swinging more for the at the money here in Activision.
This was one of those where I'm just looking at it's a ton of call buying volume. Also, you pay 101 for it, and by the end of the day, they're $1.24 bid. That's, why have a day job when you can make money that fast? You made a quarter.
That doesn't happen to you every time, Mr. Rock Lobster.
Not
quarter
every
10,000 times in an hour or so. That's a decent before breakfast for me.
It's definitely nice. There was a slew of kind of paper that went up and was canceled, and there was a lot of funky volume. Let's just put it that way. And I think they might have created. It ended up being, I think, no 45, and then they spread it off by selling a higher strike in a closer term. I think that's how it ended up going up. So it's like a 45.7 is kind of a diagonal spread. But it looks like they just want to get long. And, Activision, what are they, Grand Theft Auto? I don't even know what they make, but it's...
they make like Call of Duty, Activision Blizzard. So they make Call of Duty, they make the World of Warcraft, all those kind of games.
Oh, okay. So that's apparently it ain't dead because the stock's very close to all-time highs, and somebody wants some more of them. So again, November, post-election, possible giddiness. I don't know. It feels like though all of those things are in play for the post-election, Clintons are back. I don't know. I see vol going down. You see November buyers. It's starting to look that way. That's all I'm going to say. If it ends up that way, I don't know, but somebody's spending the money thinking something's happened after November 8th. That's all I'm saying.
Someone's certainly putting their money where their mouth is, and they got a lot more money today just after one day's move. We'll see if that stays, but making a nice quarter on a $1 trade, there are worse ways to go about your business, particularly in just a few hours. All right, moving on to another name we haven't talked about here in quite some time. This goes back to the old Grigas days of the show when it was our team in OX, and we used to mock him mercilessly for his fanatical devotion to Groupon. I believe his break even was at the 5. He had to get back to the 5 handle to break even, and obviously he finally did. But when it was back sub $5, we teased him mercilessly. This is indeed Groupon, ticker symbol GRPN. Trading today right around the 5 handle, $5 and a nickel, to be precise, up about a nickel or so on the day. And this is a name that does, or actually averages about 6,800 contracts. So decent paper, again, for an odd block candidate. Of course, it's a cheapie. Some may argue, if the Viceroy was here, he would argue that stock is an option, but that is an argument for another day. Today, doing 5,500 in one spread, so 10,000, 11,000 actually contracts total just in this one spread. It was the OC 28, so out there in the weeklies, 5-6 call spread going up 5,500 times. Paper buying the 5s for 44 cents, selling the 6s for 11, doing the whole thing for a whopping 33 cents. Looking up, we didn't see anything else going up with this, any stock or anything like that. So it appears to be what it looks like on the surface. Someone coming in, gobbling up some verticals here, looking for a nice little pop. This thing's obviously got to rally at least about a third of a buck or so for this sucker to break even. If it does it pretty quickly, he'll be happy. If it takes a while to do it, not so much. But interesting, in this season, it doesn't have long to go. He's playing at the end of October here, so he's obviously looking for a nice bump, and he's looking for it soon. Who knows? Maybe this is our friend Mr. Grigas, Rocklopsy. Maybe he's coming back in. He's been a fan of a Groupon for a long time. Maybe 5,500 lot sounds about his size.
Well, I was thinking that it could be Grigas. However, if it was Grigas, he wouldn't have sold the 6 calls for 11 cents.
That's true.
He would have just gone all in.
He would have just gone all in. He'd be naked on the 5s all day long. He would not touch the 6s are heresy to him.
And then he'd sell the 4.5 puts twice to pay for the puts.
You're totally right. I take it all back.
So, so his compliance department does it. Grigas has not condoned this trade. But it just looks like it's Groupon, right? So what are they expecting for upside? I mean, you buy a $1 call spread for 33 cents. Let's just talk about that. You're not going to be doomed by low expectations when you trade that spread, but it could make money on earnings. So earnings of the 26th, it's got a shot.
Yeah, definitely is worse things, and I totally agree with you. If it was Grigas, he would not be selling, and he'd be selling some puts. You're right, to finance it and just go big or go home, baby. That's the way he rolls. All right, moving on to our final name. I'm trying to think. I don't think we've hit on this one before on the odd block. This is Bunge Limited, ticker symbol BG, closing today right around $60, 60 and a quarter or so. So kind of halfway between their 52-week range here. This is the name that averages only about 1,000 contracts a day. So squarely into odd block candidate here and odd block territory here. What we saw here today was a little bit longer term paper, so not exactly congregating in the OC weeklies. So getting a little bit farther out. This time it was Jan of 2017, 57.5, 52.5. So a $5 put spread out here in BG paper, lighten it up to the tune. Again, this name only does about 1,000 contracts a day. This is already doing about 1,300 in this one spread. 656 of this put spread going up. So again, about 1,300 total. Selling, looks like paper selling the 57 halves, buying the 52 halves, doing that for $1 and a quarter. We saw it going up a couple of blocks over there on the ISE, similar blocks on some other exchanges. So again, a total of over 2,000 actually on there. So pretty aggressive timing, starting out with about 656 and totaling up over 2,000. Again, looks like it's a sale. So someone out there didn't see any stock, any other legs going up with this. So someone out there clearly thinking that we're in the middle of this range, and if it drips lower, if it drips down, certainly aggressively south of that 57 half handle, then they don't mind picking some of that up. If it goes too far south, though, if they are worried, they have that extra leg, because we are indeed in the middle of the range, not at the bottom of the range. So having that extra leg, so in case the bottom falls out, they're not completely wiped out here. But still an interesting trade nonetheless. A little bit of it, let's say, not a complete drawing of a line in the sand. It's more like maybe etching a light indentation in the sand here at the 57 half strike. What do you think, Mr. Rock Lobster? Take us home with this put spread in Bunge.
I think isn't Bunge or is it Bunge? I'm trying to remember what the the pronunciation of this is. Fertilizer company. They have been beaten with the ugly, with the stick lately. Yeah, Bunge was a year ago it was $100 stock, and now it is, as all commodities, in the total ash bin. So it's because I follow Mosaic a little bit. I think that thing is kind of cheap. And this is I think just somebody's taking a kind of line in the sand a little bit, selling some put spreads. That's the way the pricing looked. And just saying, hey, this is about as low as this stock's going to go. I mean, they're selling January, so that's that is in and itself. That's a long sale for. You have to tie up $4 in margin to make $1. So, I view that as, okay, they're trying to make 20% on margin till January if all goes well. So, those really long-term put sales are not my favorite unless you really want to own it. But I like to get a little more dollars than that out of it, considering the stock's $60. But it could work. It doesn't. I've seen worse put spread sales, but it is a little bottom fishing considering where the stock is and what's been going on with it. So not too bad.
Yeah, not too bad. Like I said, not the craziest put spread. Again, you're not nothing really screaming red flags here. You're right. It's not, maybe not the best approach, but a little bit longer term than maybe you like for some short premium, but not terrible. He's hedging himself to the downside, so he's not exactly just going whole hog and saying this far, no farther in the stock. So interesting stuff. We'll keep an eye here. I know a guy whose last name was Bunge. That's why I just pronounced it that way, which would be Bunge. Could be many different pronunciations. Write in, let us know if you know how to pronounce that name, listeners. Meanwhile, it's Thursday. It means it's Uncle Mike time. It's time, the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, everybody. It's Thursday. That means it's time for Uncle Mike to come on down from on high. Stone tablets and bubble pipe and perhaps smoking jacket in hand to dispense some options, wit, and or wisdom. Uncle Mike, I haven't had a chance to check in with my minions too much throughout the day today, so I had to just kind of, while you were talking before, I had to just beam in back to the studio so they can kick the minions for me a little bit and just say, hey, wake up, A, and then B, what the heck has Uncle Mike been up to? And they were whispering something about going in a bath and like scrubbing themselves. So I'm going to say either it's how to launder money or perhaps you're talking wash sales. Which one is it, sir?
Well, not into laundering money, so it kind of has to be the wash sale.
Okay.
And if I probably would talk about it on the show.
I thought it was going to be a nice dark side of the strategy block today.
Well, you tell your broker one thing and then no. All right, the wash sale. The wash sale is something that it's not too early to start thinking about, folks, because we are getting close to the end of the year and we start to need to make some tax decisions, and this is something that I can help clients with. And the wash sale is something that you need to have an understanding of if you are trading stock in a non-qualified account. Non-qualified, of course, meaning it's a non-IRA account. And we'll talk about the IRA a little bit as well. So with that, what is a wash sale? Let's say that I actually, excuse me, buy a stock at $50 per share, and I sell the stock at $40 per share. Well, by doing that, I take a $10 loss in the stock, and I can claim that on my tax returns as a loss. So with that, sometimes people might think, if they don't know the wash sale rule, oh, I'm down in this stock, so I'm going to sell this thing and just buy it again the next day. Don't do that if you're trying to get the loss for your taxes. The reason is that the IRS has something called the wash sale rule. That means that if you buy a stock back after taking a loss within 30 days of when you sell it, then you do not get to claim that loss on the stock. And the same holds true to where, let's say that you were to sell the stock and then buy some calls on the stock the next day. They might not catch you right away, but eventually they'll likely catch you. You won't be able to claim the loss on that stock for the same reason. There are various ways with which people always ask, well, what if I do this? What if I buy it in my wife's account? What if I do this, that, or the other? If you're filing jointly, you're not going to be able to do it in anyone else's account within your household and still be able to claim the loss. Now, there's no law against buying the stock back the next day after the loss, but if you're doing it for tax purposes, then that is something that you cannot do. So, with that being said, make sure that you're doing your tax planning accordingly if you are planning on taking some losses on some stocks. Now, the second part of this that always comes back to me is, okay, well, does the wash sale rule work if you gain money on a stock? Let's say that I make a bunch of money, stock goes from 50 to 60, and I sell the stock, and the next day I decide, the stock went down to 40 the next day. I'm going to buy it back, and that way I don't have to claim the gains because of the wash sale rule. No, unfortunately, it doesn't work that way. It should, in my opinion. If you're going to do it on one side, you should do it on the other. But unfortunately, President Obama has not asked for my opinion on writing the tax code anytime of a recent history. So I have an understanding for that. Now, with an IRA, let's say that you're trading in an IRA. You can go in, go out, go in, go out, go in, go out of any stock that you want to do this way, that way. You can trade 25 times a day within an IRA if you want, or more, 25,000 times per day. You can love your broker all you want in an IRA. Has no bearing on your taxes whatsoever. The way with which an IRA works is think of an IRA as a house. The government stays out of that house. And when you trade stock or options or futures or anything for that matter within that house, all you're doing is rearranging the furniture. The IRS is not allowed in that house while you're rearranging the furniture. Now, when you're bringing furniture in or taking furniture out, that's when the IRS gets you. For a traditional IRA, you have versus a Roth IRA, you have the coming or going rule, meaning they're going to get you coming or they're going to get you going. So if you're bringing money into the house, think of that as a Roth IRA. They're going to tax you on the way in, but then when you take the furniture out of the house, then they're not going to tax you. If it's a traditional IRA, they don't tax you while you're bringing furniture into the house, but the second you take the furniture out of the house, that's when they're going to tax you. So with IRAs, you don't really have to do any tax planning unless you're taking distributions or making contributions in one way or another. Government doesn't care what you're into or what you're out of when you're in the IRA. Now, the one thing that I do want to mention with the IRA is something called NUA. This is called net unrealized appreciation. The only time this may have an effect on you is if you have a lot of company stock. Let's say you're working for XYZ Corporation, and within your 401k, you've built up a very significant amount of company stock, let's say. Then you can take the stock out, and if you qualify for NUA treatment, then it might be an issue with a wash sale if you're taking money out of money that's being rolled over. The only way that's going to be even an issue at all is if you own your company's stock. And if that is an issue, talk to an accountant before you even make any decisions on that, because if you don't qualify for the NUA treatment, then it doesn't work. So with that, it's food for thought on the wash sale, and make sure that you have everything planned beforehand, because you're going to have to start making these decisions soon, because the end of the year is going to come quicker than you think. Christmas is coming, folks! And that's the strategy block for today.
And stay tuned next week when Uncle Mike will tell us how to launder money through his friends in Czechoslovakia. So stay tuned for that. Meanwhile,
Slovakia.
Got a little bit of time here. Okay, I'm sorry. All right. And let's keep on rolling. Got a little bit of time here on Thursday's show. So let's get some of you guys on board. We got a lot of mail to filter our way through. So let's get into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody. Welcome to the Mail Block. This is the portion of the show where you guys you guys get to dictate what the heck we talk about. So take advantage of it. It's pretty fun. Hit us up, the website, questions@theoptionsinsider.com. You can use the feedback form on the old site there to add options on Twitter, or also add options on StockTwits. You may have noticed we consolidated our land grab on add options. We've been at options on Twitter forever. Now you can find us. It was a little bit of confusion, though. We were Options Insider on StockTwits. No longer. We now have add options there as well. So our growth, our sway continues over all things add options, or unfortunately, Facebook, we're still the Options Insider. What are you going to do? You can't fix every platform at once, a little bit at a time. And of course, if you have the app, you listen in via the app, you can stream us and ask questions directly through the app as well. We got a bunch to get to, see how many we do. Let's start off here from James T. Maybe James T. Kirk. That'd be kind of cool. He wants to know, what do you guys think about the ticker HIMX? I was not that familiar with this one, so I pulled it up while you guys were talking. This is HIMX Technologies, and they are a fabless semiconductor name, which is kind of interesting. It's a hot area, certainly. I see a lot of people out here looking at this one. They're trading today at about $8.38, so kind of like mid of the 8 range. They're kind of middle of their 52-week range as well. They got down about as low as a little bit south of $6 and as high as $12, so kind of sitting smack dab right in the middle of that range, maybe a little bit on the low side right now. But still, a lot of people seem to be bullish on this name because they can certainly rally a bit in terms of all the love for AR and VR these days. You need a lot of semiconductors to power that stuff. These guys seem to be well suited to take advantage of that. That said, I haven't had a chance to do any deep research on this, let alone on the options chains. Let's see if I can get some in my limited quoting capacity here. Let's see down here in the bowels of this convention hall. Let's see if I can get any sort of options data. Yeah, like I'm thinking here. This is not exactly. Actually, they did some paper today. There's a 1500 on one strike here, so they're doing some numbers out here. Not perhaps completely as silly as I thought here. Mr. Rock Lobster, anybody in your chat room talking up HIMX there?
You know, they did. I was looking at it for. We saw a bunch of paper going up in there. I couldn't quite figure out what it was. It had the look of like lots of options in stock. So maybe buying some Ds, like backspreading Ds, which felt kind of weird because there was a lot of stock with price variation tags. You know, it's usually options with stock or some sort of split like that. So the only thing I could say is the semis are kind of hot, and it looks like they're pricing this for kind of a little run back. So that's about all I saw for HIMX as far as that goes. But we'll see if there's anything else. But it was kind of hard paper to figure out at the time. It was, I would say, it was tough to parse, unfortunately. Which we like to do it, but it was not totally easy. I think the Jans might have been closing. It just was a weird kind of tree trade with a lot of already volume there. So it was, who the heck knew? Who the heck knew what the volume was?
Funky trees, making the Rock Lobster throw his hands up in despair and disgust. Maybe that's a good sign. Maybe you want to play in HIMX if you too want to throw your hands up in despair and disgust. Uncle Mike, I'm assuming this is not a key holding of the Strategic Night portfolio.
Can't say that it is, but it does look like it could be a fun stock. Just kind of looking at the chart, it was up around the 12 area last March, down on the low 8s right now. If someone wants to buy something on a dip and has some conviction over the company HIMX, now might not be a bad time to do it, but I will not. You guys thought for a second I was going to buy HIMX, didn't you?
I was a little intrigued. Uncle Mike maybe turning to the dark side, laundering money and buying cheapy semiconductor stocks, but apparently not the case. Just laundering money instead.
Next one, all right. Title: How to Launder Money and Buy Cheapy Technology.
Yeah, there you go. I think people would buy that stock if it might be an interesting melding of the audiences. You wouldn't usually buy those two together, those types of things. So interesting stuff. We got a lot of interesting questions here all over the place. Let's go. Let's jump down a little bit. A couple here that are kind of similar. We got one from Sean. He wants to know, will there likely be options on special drawing rights in the near future? And then we have a similar question from TradeCraft. He wants to know, are there options on carbon trading rights? If so, do they trade much volume? Let's go in order here. If you're not familiar with special drawing rights, I wasn't too familiar with them myself. I know they're like an IMF reserve currency effectively, but that's kind of about it. Are there going to be this thing? It's not like they trade liquid, not like they print a lot of size in these things on a regular basis. So I haven't seen any options on these things, nor do I hear of any coming down the road. I don't see any listed exchanges out there racing to disseminate options quotes on special drawing rights for the IMF. So I'd be surprised, Sean, if that were indeed the case. As for the carbon trading rights, this is kind of an interesting area. I don't know if Mike or Andrew, if you guys pay attention to this. This is kind of a big deal overseas. They tried to get it going here a few times. We have things like there's Climate Exchange and others that are trying to make these things into listed kind of marketplaces. You hear a lot of back and forth about the viability of that the carbon offsets, the carbon trading rights, those kinds of things, whether big companies are using them to kind of just gobble up these rights and just kind of effectively kind of just buy their way out of polluting. And there's a lot of issues with that. That said, I know there's a couple of different products out there that trade on these. I don't know. I haven't seen any options. I've seen the straight up rights, and they're kind of like more, I guess you can call them more like a swap or maybe a swaption rather than an option itself outright. But I don't know. Are you guys familiar with that? And well, first off, if you want to comment on special drawing rights, have at it. And then secondly, what about the carbon trading rights? A lot of rights questions today. Any thoughts on either of those?
I myself don't have the last thing I heard about carbon trading rights was JP Morgan was setting something up for companies that had carbon rights to do something to trade. So of course, gosh knows how much they make setting up those markets. But I have not heard on anything like that. Actually, one thing you do is always just check the CME website, see whatever they got cooking. So I didn't see anything on energy. I know they do have weather futures listed. I have not myself. I just figure, if I trade stock options, that's esoteric enough. I wasn't quite ready to jump into biofuels or weather futures. So there you go.
Not trading Chicago snow on the CME.
Yeah. I am not.
What's the deliverable on that? A box of snow?
A big box of melted snow, which is always fun for the kids. I was talking to CME yesterday, actually, and they were talking a lot about coal. So coal is an interesting product. Maybe you don't hear a lot about, but not so much on the carbon trading rights. Maybe we'll have to dig in a little bit more. But to my knowledge, there certainly is not a kind of listed and liquid venue for these kind of things. I mean, there's a climate exchange. CME has some other stuff, and there might be some. They may have a couple options listed, but clearly I don't think they do a lot if they are indeed out there doing any volume. But we'll check into those. Kind of interesting stuff. You guys are all over the place today. I kind of love it. We got our old friend here, Trader Onki. I haven't had a chance to dig into this one that he sent in. Maybe Mr. Rocklapsy, you have. He wanted to know, I think this came in earlier. Actually, this was during our show on Monday. We didn't have a chance to get to it. He wanted to know about MTG earnings, ticker symbol MAGIC, MGIC. Looks like they were about to report earnings. At the time, it was the next day. It was going to be Tuesday morning before the open. He was writing in. He wrote in a while ago with some other questions about another name and some funky open interest. It was before the Cabela's Bass Pro Shop deal. And he wrote in again with another one, this time saying he pulled up the book and he sent in all the associated visuals saying this heavy volume, about 10,000 contracts on the OC 8 calls, as well as the Nov 7 puts, Jan 5 puts, and the Jan 10 calls. Would you please share your thoughts? I'm looking at this cold. I kind of just pulled it up now. I mean, it does certainly have the look of something similar to what we were seeing in the Bass Pro Shop, where someone looked like on the outset appeared. Again, we pulled some of that again later to confirm that, but it does appear on the surface that there is some upside trading, and perhaps indeed could have been. Perhaps we don't know. We haven't dug into this unless Mr. Rocklapsy, you have after this question came in. It could be financing with the puts, but it could be strangles. It could be all sorts of other things going on, that they could be doing out here. They could be short the strangle, in which case they want very little to happen out here. So there's just looking at open interest in and of itself. We've said this many times on the show, is not. It's a good first step. It should maybe serve as a flag to say, hey, this maybe warrants further investigation. But just looking at it and saying, well, clearly someone is positioned to the upside. It could be. That could very well be the case. But I haven't had a chance to dig in any more on this. Mr. Rocklapster, is this one ringing your bell here? MTG earnings?
I looked at this a little bit. So the Jan looks like some kind of a collar or even a short strangle, because the 5 puts traded for a quarter and all the calls traded for 5 and 6 cents. So it looks like somebody sold the Jan. Could it be against stock? I'm not quite sure about the stock component, but it just kind of went all up as a big mess on several exchanges. So as far as the shorter term stuff, I couldn't tell as much, but it looked like there was just, I don't know why you'd sell the Jan 10 calls in 2017 for 6 cents or 5 cents unless you own the stock. So it kind of smelled like somebody owned some stock and sold the strangle against it to try to jack the yield up. So the January calls actually traded in July when MGG was trading 626. So the 5 put was a lot more in play. So my guess would be this is one of those weird covered stock plays where you sell a call and a put against a stock position, which actually just gets you 2 short puts if you know how to do synthetic equivalents. So people, it's kind of a funky position, but if you own the stock, but synthetically it's the same as 2 short puts. However, in this case, if they own the stock, they don't want to sell it and they want to write some premium. That's what they got. So it could, obviously if you bought the stock's up about 2.25 from there. So that part has done well. But the Jan 10 calls actually haven't even moved much since then. So I'm thinking most of the paper looks, I would have to say it would be bullish if that would be the case. They're just not seeing a lot.
Hey, why sell one put when you could sell two for twice the price, right? That's how that logic works, right?
Exactly.
But yeah, that's kind of a good breakdown. That's kind of what you have to do, listeners, if you are going to start looking at this kind of open interest. I mean, the open interest itself is interesting, certainly worthy of note. It's a flag. We got to kind of dig in. Hopefully, you have a robust brokerage platform. People ask us all the time, what tools, what platforms we use here on the show. We use quite a few. Mr. Rock Lobster, he likes Acumen. He also, I believe, uses some of the Liveball X platform. I use Liveball as well. Also use Trade Alert. So there's a lot of different platforms you can use to kind of dig into when this open interest was opened, at least the lion's share of it, what went up, where it went up on the bid offer spread, things like that you kind of need to do to really try to attempt to intuit what the heck these guys are up to. And even then, sometimes it is a bit of a crapshoot on this stuff. But either way, good questions, everybody. You guys are all over the place, and we love that. Keep them coming. Meanwhile, we're going to keep on rolling into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is indeed the portion of the show where we tell you what we're watching for the rest of this week. It's been a busy week already. Over 100 names reporting earnings this week. A lot of them are coming out. Let's do a quick, before we finish up here, let's see if we can get a quick check-in on some of those names that I was talking about earlier. Give me a quick second here to pull up our friends Softy. Yeah, still up in the after hours. They closed 57.25. They were down about 28 cents intraday, and then after hours rallying a little over 3 handles, about 318. So up about 5.7% or so in the after hours. So again, fairly decent performance here for our friends here. Good old Softy. E-Trade was kind of a bit of a resounding meh, and actually turning the tables on us in the course of the show. They were off a little bit at the beginning of the show. Now rallying a bit, nearly a buck, about 85 cents, or a little over 3% on this name. So the worm turning perhaps out there in good old E-Trade as well. In terms of other names that are coming off the end of this week. Pretty much tomorrow we got McDonald's. So if you're into the old Mickey D's and the fast food, they got you covered there, as well as GE and Honeywell. Those are kind of the big three that are still reporting tomorrow. So, but yeah, we're kind of just kicking off earnings season. So if you're into this kind of stuff, we got a lot for you to sink your teeth into in the coming weeks and coming shows. Speaking of sinking our teeth into stuff, Uncle Mike, we'll start with you. What are you going to be sinking your teeth into for the rest of this week into the weekend?
Well, I'd like to see if we can get some type of market movement in some way, shape, or form. I don't think we're going to get a ton of movement tomorrow, but just in looking at it, we're we're up slightly on the week in stocks. I think we're up just maybe less than 0.5% in the S&P. So I'd like to see if the market would do something for itself this week.
I think we all would like that, sir. Yeah, certainly after the debate last night. Not exactly perhaps the move some people expected. Again, Mr. Rock Lobster alluded to at the top of the show. Maybe that's the market kind of just pricing in a de facto Hillary victory at this point. Certainly maybe seems like that from a VIX perspective. But that said, I won't put words in your mouth. Mr. Rock Lobster, what are you watching for the rest of this week into the weekend?
Mostly earnings. I want to see, for what the kind of the saddest part about this earnings cycle was the earnings have been okay so far. Technology earnings, pretty good. Even Microsoft now has big technology reports, and where's the rally? there's zip, nothing. So there's always that looming. The end of QE. The ECB is not doing anything else with rates. I think the central bankers are going to try to quietly sort of go away. It feels like, and stocks. Where it is going to have to be some sort of weaning process, and we'll see what happens. But right now. I mean, kind of decent earnings. The financials were okay. Maybe we get a rate rise and life goes on, and maybe this bull market can last longer. So, I mean, one thing about this bull market is, stocks got ridiculously oversold because of the financial crisis. And at the time, it definitely, it was ugly. There's no question. I mean, everybody was worried about what was happening. And so, a big part of that rally back is just kind of getting back to some kind of reasonable value. So I think we can run, especially if technology can continue to keep driving, larger earnings growth. I still like the Qs as my favorite place, but if rates can move a little bit, I think you could see some money coming into XLF and starting to break out too. So not those are the two places that I still think. And last one, obviously, oil. It would be the last spot.
All right, thank you for that, sir. That's going to do it for the Around the Block segment. It's also going to do it for this episode of the Option Block. But before we go, as always, let me check back in with my cohorts, my partners in crime here on the old Option Block program. See what they have cooking that may interest you. Let's start off in that paradise on earth known as St. Charles, Illinois. Uncle Mike, what is cooking in the land of all things RCM Wealth Advisors?
Well, you can buy my book on Amazon. Go Long, New Option Strategies for Buy and Hold Investors in the Kindle edition. It's for about the price of a Starbucks coffee. And also, if you are, and that outlines pretty much all of my base philosophies on investing, long-term investing using options, kind of an interesting combination. And also, if you are interested in working with a financial advisor who doesn't cringe and look at you like you have worms crawling out of your ears, if you mention the word option, then I'm your guy. Feel free to contact me at mtosaw@rcmfs.com or 312-212-3531.
Now, what if I do have worms coming out of my ears? Will you still look askance at me, or will you welcome me with open arms?
Well, I got one of your minions is actually looking to open up a Roth IRA, and he has some worms kind of crawling out of his mouth, so...
Roth. I told him a traditional IRA or nothing. So I have to deal with those boys.
But you don't pay him enough. He still qualifies for a Roth. You don't pay him enough.
Jam and Jelly is convertible into a traditional IRA. I'll have you know that. I investigated that. So they can convert that. I think the ratio is about 0.6 to 1. All right. And Mr. Rock Lobster, what's cooking in the land of all things optionpit.com?
VIX, and more VIX. If you want to understand how it works, we will have a webinar at the end of the first week of November. That will be our monthly webinar. So they are well attended. People can figure out how things work. And that is how we get clients because they listen to our webinars like, wow, you guys really aren't as goofy as you are on the radio. You actually might not know what you're talking about. So when they sign up and they like it and they stay with us for years. So that's how it works.
There's a high goof factor on the radio, that's for sure. All right, so with the goofage done and the plugs done, that's about all the time we have for this excellent journey through the world of options today. We hit on VIX, we hit on usual activity, we hit on what the market's up to, some earnings, a bunch of other fun stuff, and your crazy out of left field questions, which we always love. Keep those coming. And on behalf of Uncle Mike and the Rock Lobster, and indeed myself, including my live studio audience here, we'll see you next time for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.